Over the past few years, America's economy has changed in ways that could not be predicted. But for those with a seat at the Fed, and our political leaders don't seem to notice that the rising tide is not lifting all boats. What is left are those riding the waves in boats with gaping holes below the waterline. For these people, the rising tide brings a climbing cost of living and stagnant wages. The winnings are flowing to those who already own assets, back when those assets were affordable. And those assets have soared to values not seen before. The rest are left with the burden of inflation and debt service. The reality is that most people at the bottom don't have what it takes to obtain the skills to reach to a higher level. But the overindulged pundits, who never worked an honest day in their lives, don't seem to notice or care. Their answer is to ship the low-wage jobs overseas so we can have cheap crap for Christmas. Meanwhile, the Federal Reserve is whining that inflation isn't high enough. So they print millions and billions, and along with the Speaker of the House, they front-run their own policies. No wonder they're not worried about inflation. And with the astronomical rise in asset bubbles, the lower half of the country has nowhere to go but down. And speaking of down, if you listen to Peter Schiff, the markets are going to fall off a cliff. Well, at some point, yes, but Peter's been saying this for years. Some, though, like Robert Kiyosaki of Rich Dad Poor Dad, is expecting the world's biggest crash in October, including Bitcoin, gold, and stocks. Well, we're in October, so let's take a look. Today we're going to take a look at three charts, beginning here with the iShares Russell 2000 ETF. Symbol is IWM. If you remember, I've been talking about the Russell 2000 being the canary in the coal mine. I think wherever the Russell goes, the other markets will follow shortly. Now, as you can see, the Russell is running, say, sideways, more or less, trading in that channel. We have been doing that for a number of months, going all the way back to early 2021. Moving on down here, you can see there's no real spike in volume, so the selling isn't really all that heavy. It is a little bit higher than it was back here, but nothing to be alarmed about. And what's interesting is that while you take a look at the MAC, you can see the fast line came through the slow line in early 2021, and yet the market has gone sideways, but the fast line and the slow line are coming on their way down very gently in a controlled manner, and I'm expecting a fast line move to head up and through the slow line relatively soon, within the next month or two. This does not show any crash, at least not in October. And as you go down, you can see the histogram is indicating a nice bottoming and basing here, and it's heading on up. You'll see the other oscillators doing pretty much the same thing. Price rate of change, the relative strength index with a nice bottom here, and an upturn actually toward that mid or 50 line, and the same thing there with stochastics. The bottom here, and a nice process moving through, and then on up. So it looks like these oscillators actually want to get running. Well, it's not quite time to run, but I don't think we're going to have a crash. Now let's go ahead and take a look at the S&P on the weekly basis. This is a 3-year weekly. Let's do the same thing with the S&P. And we're now taking a look at the 3-year weekly chart on the SPY. And as you can see here, from that point there, we had a pretty good water sell-off, and of course that was early 2020. Right now, this particular sell-off looks to be pretty moderate and controlled. We're resting on that 20 EMA, and there's no sign of any crash, at least not yet. And you go back and you can see a couple of other sell-offs there, as well as there, and then perhaps even here at that point. These are all pretty similar, and you could even add this to the list. But certainly, these don't indicate any kind of crash in the market in October. I think right now, this is a run-of-the-mill sell-off. Moving down here into volume, I don't see any huge spike in volume that you would expect with a crash. Now into the MAC, we can see that the fast line is heading on down. It is gaining some separation between the slow line there, but right now I don't see any red flags flashing a hard sell. I think we're just coming on down in a controlled manner. And I think, as you'll see in the daily chart, the correction may be over relatively soon. And here in the histogram, we're coming on down here. We don't necessarily see a bottom yet, but I think we will soon enough in the next few weeks or so. Same thing there in the price rate of change, and the relative strength has gone down below that 50 or midline, but once again we don't have the height that is going to be a participant in a huge sell-off. We're coming on down, but so far it's controlled. Here in the stochastic, same thing. We still have pretty good strength. We're above that 50 or midline, and I think it's going to halt relatively soon and head up. But only time will tell, and also perhaps the daily chart will give us an idea. There in the Williams, pretty much the same thing. There are no waterfall sell-offs that I see. Moving back up to the price chart, and then one last look, and now let's go to the daily chart. And now to the 6-month daily chart on the spiders, and you can see that the top was there in early September. We had the sell-off, a rebound, another sell-off, a second rebound, and another draw down here that I think is starting to wane. So moving here into the oscillators, first of all, the volume. There is a spike in the volume here, but as we talked about, it seems to be calming down, and I think that is going to coincide with the bottoming, and the basing, as you can see, has started here in the MAC. Now, the fast line had a long way to go before it went above that slow line, and I figured that we would have a bit of a hesitation, which we're having right now. But I don't think that this is going to last too long. I can see a definite move on down with that bottoming and basing here, and I think we'll last into, say, next week, maybe the week after, but I don't think we're too far away from a bottom. And that is also shown here in the histogram. Nice bottom basing there and heading on up, even though the price chart isn't right with it, but it will. Just take some time. And the price rate of change you'll see here, and then into the RSI, the stochastic, and the Williams. They're all showing the same thing, and to me that's a very nice bottoming and basing occurring right now. It's evolving. It's going to take a little bit longer, as I said, into next week, perhaps the week after. But even the price chart shows you that the market is testing this area here. I think this third test will be successful, and then hopefully we'll be on our way. I think that's the probability. I don't see any probability in a market crash in October. And for today, that's ChewDog Charts. Thank you.